And there you have it. The markets are officially closed on this Wednesday, June 10th. Welcome, investors and traders. I'm AJ Monte from StickyTrades, and we are T-minus 2 days and counting to the SpaceX IPO. And as you may have seen from our headline, I think that investors are going to get hurt. In fact, the title of our thumbnail page for YouTube is going to be "Investors Will Most Likely Get Punched in the Face." Now, why am I saying that? Well, all you have to do is go back and look at history of some of the biggest IPOs of the last 10 years and the months that follow the initial offering or the IPO, we see negative numbers all the way. And we're going to talk a little bit more about that. The Dow closed right on the low. I mean, the last minute of the trading day was a new low. We were down 952 points on the Dow. The S&P is getting slammed below the 200-day and the 20-day moving averages, and the 20-day moving average. And it looks like the selling pressure is coming in. Before we get into the charts and before we get to your questions and ticker symbols, let me bring on Nod, because we had some CPI numbers come out today that I think spooked the market. Nod, why don't you talk a little bit about that, and then we'll come back to SpaceX. Go right ahead.
For sure. Lots to cover. Thank you so much, AJ. And as always, good afternoon, everybody. Thank you so much for joining us. We do appreciate you taking time out to join our team here as we digest this midweek bit. Listen, U.S. equities did fall today, wiping out $1.1 trillion worth of value today. People are blaming the comments from the president about re-engaging Iran. They're also saying that stocks are coming under pressure because of the aforementioned SpaceX IPO, which is on Friday. They're thinking that some traders are unwinding some of their winners, mainly the retail participants. They're shedding some of their hot chip stocks for this IPO to make room for this large IPO. Others believe the weakness is just profit taking after such a big run. The SOX ETF alone is up more than 80% alone this year. You talked about the CPI, AJ. May's CPI rose 4.2%, which is the highest level since April of 2023. The core was at up 2.9%, the highest since September of 2025. Most of this inflation data was due to the rise in energy costs, and this put Fed hikes back on the table. The index for energy increased 23.5% over the last 12 months, and the index for gasoline is up 41% in the same time. You know, speaking of energy, crude oil has been on the forefront and showed another massive drawdown. This was the largest 4-week drawdown of our strategic oil reserve in history. 7.2 million barrels this time with an expectation of 2.9. So that's something we need to watch, AJ. And also today, the Warren Buffett indicator, which we've talked about, that's where you take the total market value divided by the GDP, hit the highest level ever today, signaling that the stock market is significantly overvalued. Now, I know you wanted to touch on CPI and SpaceX and some different things, but let me know what you think about this, AJ. 1 week from today, Fed Chair Warsh has his first FOMC rate decision. And I'm going to show this chart here real quick. 1 second.
Warsh is already in the hot seat, right?
Right, yeah. U.S. equities have never been more overvalued. A record of 40% U.S. stocks traded an EV, or an enterprise value of sales ratio, of over 10%. So for those that don't know what that means, this percentage has quadrupled since the 2022 bear market. This also exceeds the 2000 dot-com peak by 5 points. So, AJ, with all of that said, with inflation and debt rising, the Fed is in a pickle, as Econ 101 says that we should raise rates, but that will break the backs of folks that have a tremendous amount of debt and businesses that are staying in debt. So what does that make you think about the majors? Let's talk about your diamonds target from last week and maybe some of the financial sectors, because this is all in play.
Yeah, that was very interesting. You know, this does not come as a surprise to anyone who's been following us now. Because if you remember from last week, I was looking at the technicals on the weekly market report, and I pulled up DIA. Here's a chart of DIA, and I said, you know, I'm not really that excited about it, any upside targets. And I said, I can't really go that much higher. So here's what happened. I mean, it's funny, but then again, it's not funny when you look at the result. But right here, it's hidden behind that red candle right there, was my upside target on DIA. Now, remember, that was last Thursday that I put that target out, and the target was right up there at 517.72. Look at the high from right here on Friday. The high was 517.75. So we surpassed it by 3 cents, and then the market closed with this massive bearish engulfing candle. Now, everyone is tuned into the news and the economy and what the Fed is saying about interest rates. But folks, if you're joining us for the first time, especially if you're over there on X right now, we do this regularly on YouTube every Wednesday. We're showing people how to read the signals. That's it. We're showing people how to read the buy and sell signals based on candle charts. And I want to give you a little slice of what we do each and every week, because this gives us at least a little bit of bragging rights here. Last Wednesday, we took ticker symbols from our audience, and our member audience gave us 50 stocks to analyze in 60 minutes. So I do this very, very quickly. In 5 trading days, 60% of those targets have already hit. But it gets better than that, because there's a lot of them that just missed by pennies. But if I scroll back here and go back 10 trading days, you can see the number jumps to 66%. I shoot for 70, by the way. I often get higher than 70. And then if I scroll back 15 trading days, see all the green there, folks? That's targets hitting. No one in the world is going to do this. I know that for a fact. And if you know anyone that is doing this, please introduce them to us. We'd love to collaborate. But right here, we had Tafe and Mimai and David on X hit their targets because we took ticker symbols from them. And I said, if the targets hit, you're going to get some swag. So MU hit the downside target. NVIDIA hit the upside target and then got slammed after that target was hit on the upside. But if I go one more week back, 15 trading days, look at that, 76%. Now, over 60 trading days, if I keep going back, the average is 80. It's still maintaining at 82.2% hit rate. So what does that mean for the average trader? Well, if we're giving you a target up or down and we're telling you there's an 80% chance or better that that target will hit over a 60-day period, what are you going to do with that? Well, the option traders know exactly what to do with that. They'll buy longer term options in the direction of where we're setting the target. They use risk management principles to protect themselves in the event it doesn't hit, 18 to 20% of the time. And then they move on to the next trade. Let me give you an example here. Again, we got a lot to talk about, but SMCI, our members got into these puts right here. We got into the $40 puts in September, bought those for $5 last week, $5. That's $500 per option. Yesterday, some of our VIPs took a 48% profit. Anyone who's still holding on after today, and it's okay that prices go up after you sell for a profit. It's okay. It happens. But after today, that trade is up over 100% in mere days. That's what options do. And that's what we do with setting price targets. You see this diagonal line down here? That was my price target from a couple of weeks ago. It went past the price target, absolutely. But look at that. The technical showed us it was coming back. Now, this is an exciting time. I can't say it's going to be an exciting time for investors, especially for those that get involved in SpaceX. But I got to talk about this, because if you go back in history and you look at some of the biggest named IPOs, and I got a slide here that shows you. This is from Rec Fencer on X. He did a little research and I backed it up. I plugged it into Grok and it came up with the same numbers. Robinhood, dumped 90% after the IPO date. Lyft, 79%. Look at Facebook. I remember that because it was ticker symbol FB. Remember that? And that dropped 54%. But look at Rivian, almost 90%. Coinbase, 57%. Palantir, down 53%. And what that is telling me is that the added hype that we are seeing in this particular IPO in SpaceX, it's going to be, this is my opinion now, it's going to be ugly for the people that get in on day one. You might be able to make some money after the lockup is over, and investors who get in pre-IPO have to hold those shares for 60 days. And then they can sell. But here's the big deal. And I know this for a fact. Don't ask me how, but I know this for a fact. I still have a lot of contacts in the brokerage industry. the term underwriter, these are the brokerage companies and institutions that get shares from the overall allocation offered by SpaceX. Now, let me tell you how dangerous this is right now. When not, and you even announced this on your Nod Live news feed, when initially SpaceX was going to have a very small float,
Right.
meaning offering a very small number. I think it was like 5% or something. It was very
Yes.
low. And then they opened it up, and think about why they're opening it up. They're not moving the shares, and they're not raising as much capital as they once thought. So you're seeing it right now in the headlines. This is the hype that's coming in. Now, where is their caution flag here, especially for the institutions? Look this up if you don't believe it. We got underwriters who cannot sell or move the shares that were allocated to them, or the shares that they're responsible for. The underwriters are stuck with the unsold shares. They're stuck with them. So they're locked. They're locked into a major loss if they can't get rid of them. And so what happens after that, if they don't get all the shares out, and I don't believe they are, I believe like major companies, I'm not going to mention the name, were given big allocations. And then what happened, and they weren't moving the shares. And if you're following the news, what has happened recently? I think it was Merrill Lynch. Or what was the big house? Again, I'm referring back to the man Nod Live, right? Because he's putting out all the news and he's got all the stats. But what was the first firm to go out there and lower the threshold for people coming in?
Well, that was Morgan Stanley. They were one of the leads. Remember, I think they got a little bit cute because they wanted to keep it really prestigious. They said anybody that had
Right.
2.5 million in their portfolio, then it went down to 500 grand, and then it went down to 2 grand. So that's quite the delta. And no offense, some of us have smaller accounts, but for them to go to the top of the top people down to the people like me, that tells you it's a little bit of desperation.
Well, here's the thing. You got to understand that IPOs historically, the initial shares, prior to the launch date, were more or less allocated and given to the VIPs, right? The rich and famous of these brokerage firms and institutions. But the VIPs are not moving or buying as much as they thought. So now they're lowering the threshold. There is your red flag right there. They're lowering it to people who have $2,000 in their account. And these people are trying to buy, 100 shares if they can.
People are fully invested. We've been talking about this for the last 8 weeks.
Exactly. And we see this in the S&P. We see this in the SPX. You look at the monthly chart on this one, and I'm going to go to another chart in a moment. Look at how vertical this chart is over time. It's literally gone parabolic. Now, what I did is I do this once in a rare while, but I took this slide here. Let me go and move this out of the way for you. This chart that you see right here, let me make that just a little bit bigger. This chart that you see right here is the SPX, the S&P 500 monthly chart as of yesterday, but it's still going to be the monthly chart from today as well. Now, you see the pivot forming right there? What I did is I took the S&P and I clipped the exact same time frame in the uptrend, and I clipped that from 1999. Now watch this, folks. You're going to flip out. This is uncanny. Let me get rid of this. What did I just do? I hope I don't muff this up. Let me get rid of that slide there. Undo the graphic here. And I want to show you what's happening here. If I go down here and move this up, look at this. Look what I'm doing. I'm taking 1999 and I'm overlaying it on top of our current chart. Look, you got the same sell-off happening here. You got the same dip here. You got the same rally to a high right there. Let me move it away so you can see again. This is just unbelievable, folks. This is really unbelievable. So you got, watch, I'll move this down again so you can see. Look at that. Look at that footprint. So we are at the exact same level, relatively speaking, with overbought condition in the market. Can we see a little bit higher? Well, according to 1999, 2000, we could see another attempt to go to the high before the big failure. So we've got a lot of time, I believe, before the big, I'll even say a quote unquote crash. I think we still have time, but that doesn't mean you could roll back and sit back on your heels and just relax with this. So our option traders right now are preparing with more or less, I would say, insurance positions on the Qs. The QQQ are, especially our VIPs. Look at this monthly candle right here. This is on the Qs. We got a bearish harami on the monthly. And with only about 3 weeks left in the month of June, I do not believe that that candle is going to go green, even with the SpaceX IPO coming out. And down below, look at what you got on the CCI. The CCI, by the way, is my most favorite oscillating index right there. And it is no doubt pivoting lower. It's pivoting lower. So again, I'm very excited about the markets. I can't say that that will be the same for long-term buy and hold investors, because on Monday night and even yesterday on our VIP call, I'm not giving advice to people. I'm just saying, listen, I lived through 40 years of bull and bear markets. This is like it's like deja vu all over again in 1999. The other thing, Nod, is that the IPOs, with all the hype, they tend to get pushed at market highs. Go back and look at history when Yahoo came out and Amazon came out right at the highs in 1999. And then boom. Why are they launching IPOs at a high? Because people got this buy frenzy. They got this greed factor going on. So they're going to go in there and buy. And then they get this uh-oh moment, and they're left holding the bag as prices start going down. So I think that one of the best strategies right now is to build cash like Warren Buffett has been doing, learn how to trade options on the way down with inexpensive options going further out in time. I'm not talking about buying short-term, very cheap options. So those will get you killed almost every time. But we've got a lot of opportunity here, and I am so excited for our members. By the way, you see the scan code right there? That scan code? If you want to join us for 15 days free, no strings attached, take your phone and scan that code. It'll bring you to the website. All you got, there's no credit card needed either. All you got to do is set up a temporary account, and you could plug in. And then at the end of 15 days, that expires. You don't have to call anyone to cancel it. It just literally expires. And if you want to come back, that's totally up to you. But we don't pressure anyone or play any of those silly sales games to get you locked in. So just make sure you scan that code. Go ahead,
Hey,
Nod.
AJ, I had a quick question, but before we get to Oracle, which did come out with their earnings, Robert is asking on the diamonds, is that a Marabuzo? And can you explain
on
to
the
people
diamonds?
what that might mean?
On a daily or weekly? What time frame on the diamonds today?
Yes.
That's not a Marabuzo. A Marabuzo is a term that is, if you like, a bearish Marabuzo, you would have a rectangle known as the body here, all red, with no shadow on the top. Like this has a shadow on the top. So that would not be qualified as a Marabuzo. But what that means is that the market opened right at the high of the day and closed exactly on the low of the day. So it did close on the low, but there's too much of a shadow for that to be classified as a Marabuzo. But we still have the big deal for today, you know, with the market's down about 900 points. The big deal is that we did close on the diamonds below the 20 period moving average. That's a big deal. That's a shift in the short-term trend, which could accelerate into tomorrow. Now, I'm still leaning for tomorrow's weekly market report. I'm still leaning to the downside. We still have downside targets here on DIA. We still have downside targets on IWM, the Qs, and SPX. But our positions, I mean, they're doing so well. The overall positions, and remember, we had 73% of our positions were bullish last week. And just on Monday, I started doing rapid fire trade publications. So we reversed and added a lot of cash to our positive delta positions. So we're gearing up. We're more or less positioning and adjusting our positions for a down move. So again, with the options, it doesn't get any better than this market right now. This is the best I've seen in 4 decades. No kidding.
Yeah, you've been pretty excited about this. Well, in keeping with our theme of staying current with earnings, before we get to some questions, Oracle did just post their earnings. It's pretty flat after hours because they posted a nice revenue and posted earnings per share. But just like SMCI, they're going to raise approximately $40 billion through a combination of debt and equity. So they're joining this party of getting it while it's hot. Now, SMCI got crushed for it. What do you think is going to happen to Oracle given the charts?
Now, again, I'm going to do something that hardly anyone's going to do, but I'll do it here. And Nod, I'll put your name next to this one.
Thank you.
I think Oracle is going to bounce just a little bit after. Let me move this. It's going to open up a little bit lower here tomorrow because it's already down about $3. And then I think it's going to make an attempt to go up to that moving average and then watch out below. I think you're going to test this low from back here. So I'm going to say opens up tomorrow right around $200, maybe a little bit lower, trades up to 201, maybe 202, and then right back down to 178 and change. And so we'll leave that up there. Now we'll put that on our spreadsheet with your name next to it. We'll track that one. But I think, and the reason I drew it that way is because at the very top we have a pivot A. Any kind of a bounce off of this low would be a B here in the ABCD pattern. Then a pivot lower from the 20-period moving average will lead it to a lower D, which is going to bring us very close to this gap fill down here. So I think that you got to watch the downside on that. We don't have a position in this, but I certainly, for me, I would certainly not be looking to buy anything into this right now. Not at all. Now, wait, look how fast this time is going. We got to get ripping here with some ticker symbols and questions. So the audience is active, very active. Thank you very much for that. And by the way, let's see if this works again. If you all just put the word yes, just you like it, you like what you see, put the yes in the chat. Let me see if we move up on the standings on X. Last time we did this, we moved up a couple of notches because the algorithm picks up on the chat. Or tell us where you're from. Tell us where you're dialing in from or calling in from. I know we got some people in Korea, actually. We got Pilot Pete and David. We got all, there we go. Yes. Thank you very much. Let's see if we move up. Give it another minute. We're going to move right up on the standings there. So, all right. So go ahead. So pick another question or ticker symbol.
Yeah. So Rob Indy and Bill Brophy have picked up on people that are kind of unwound into this SpaceX, and silver has not been saved from that. What do you think about, what's an update on your overall feeling on silver, and what do you think about PSLV in particular, please?
All right. Now, hopefully, I know not everyone's doing this, but hopefully you're on X following me with hashtag AJ SLV trades. And if you are plugged into my X page, you know exactly what I'm doing. I sold out of my PSLV entirely, the complete position. I'm out. I did that last Friday, by the way. And I'm glad I did that because, look, we're obviously a lot lower. I sold out of my entire position on this red candle. Now what I'm doing is I'm moving the money into SLV, okay? That's SLV. I'll show you where PSLV was when I sold it, right here. Here was Friday, right here. Sold on that big red candle with that big volume. The volume is what really told me to get out because I did that right on the close, and then it went lower. But now what I'm doing is I moved into SLV and I'm selling calls against the SLV position. I'm doing that because selling calls allows me to collect cash from the market. When you sell a call, you're obligating yourself to sell the stock at a higher price. So I sold the $64 calls up here and I collected money. When I first did that, I got $2.50. They're obviously lower. When I roll out and sell my calls in July, I'm going to get another big payout. So what happens is all the cash that I'm generating from selling calls is being reserved now. I put that to the side. And on the next pivot point on SLV, what do you think I'm going to do with the cash that I collected from the market? That's not coming out of my principal amount. I collected that money from the market. Again, that's called the wheel strategy that I'm doing. I will take the money from the market and buy more SLV. And when I buy more SLV, what do you think I'm going to do with the calls? I sell more calls. So there's the wheel. I sell calls. I buy stock, sell calls. If I get the stock called away, I'll sell puts to get paid again. And that's what the wheel strategy is all about. If you want to learn about the wheel strategy, come on over. We'll teach it to you. You can easily learn the wheel strategy in less than 15 days on the free trial, guaranteed. It's not rocket science. We can teach that in 5 minutes. All right. Now we got 5 minutes.
Yeah, we're
And,
cruising.
yeah, go ahead. So go ahead.
Our friend Robert Lischbaum, he's Mercy, MRCY, please. It's not one we've covered before.
I don't remember ever covering this one, did
No.
we? I don't see any lines on here at all. All right, so here's what I'm going to do. This is Robert, you say?
Yes, please.
Okay, I'm going to put a downside target on this one. And Robert, if we hit the target, you could get some swag as well, right? We're in the business of giving out swag for the participants here. All right, now see this low right here? That's where I think the stock is going to wind up, right there. Now, why did I drop my line right there? Here's why. Because if you look back to the left, here's an area of resistance. See this green candle? Pivoted down, then went up. There's the resistance. It's resistance back here is now going to be new support here. You see? It's called role reversal. Former resistance, broken, turns to support. And we did see the pivot higher. So this is going to hold this support. So I came in a little bit higher than the support to match this low here, right? So for the record, all right, this is what I do 50 times every Wednesday. I'm going to put the downside target for you at 98.16. I just leave it in as the box drops it. I don't adjust that. We don't have time to adjust it. So 98.16 is my target. And Robert, if that target hits, and I think it will over the next week or so, we're going to send you some swag. Now, I don't know if the swag is going to make back any of the loss you might incur if you own this stock, but I would, if it was my position, I don't have it, but if it were my position, I'd be putting a stop somewhere below that 20-period moving average, and I wouldn't even look back. Just get stopped out, move the cash, and look for your next trade candidate. All right, Nah, what do you got next? We're on a roll here.
Mark would like you to look at CrowdStrike, please, CRWD, please. And while you do that, he's saying also, when you were on the floor and there was a panic sell-off, what did fear look like on the trading floor itself?
Traders do not have fear. That's God's honest truth. If you're a fearful trader, you don't belong on the trading floor. I'm not going to say your emotions don't get to you once in a while, but you definitely don't fear. If you're fearing, that means you're freezing up and you're not doing anything to protect yourself. The traders have a much more shallow drawdown than the average investor, maybe half of 1%. So in other words, if I bought a position and it went half of 1% against me, then I'm out. Unless, and this has happened to me, unless the market opens up, lock limit down, which it did for 3 days in a row in the silver market in 1987. And with the futures markets, you can't get out. Even if you want, you can't pay anyone to get out. You're just going to take the hit, and that's it. But in equities, we got stop loss orders, we got options you could use to protect yourself. But with this one, I think this one actually has more of a chance of bouncing here. Now, I'm not going to say a big bounce, and it doesn't look like much. But you see that I'm going to lower that to 677. So this stock actually has $30. That little mark right there tells me this stock could rally $30 in the near term before making an ABCD lower. So I think, that's I think a pretty safe bet at 677, and then watch out below as the 20-period moving average will most likely fail to maintain that support level. So yeah, we got time for one more, and then we're gonna have to go into the wrap. Look at that, we moved right up on X. I love that, folks. You're so great. You really help us so much when you do that.
What pick your favorite gold weapon, whatever you want to analyze that has exposure to gold, please.
Gold?
Yes.
Well, I mean, I like IAU.
It's technically in a bear market, right?
Well, yeah, 20% for that. Yeah, we are. But look at the IAU is looking pretty good. This is the cheaper version of GLD. Now, I wouldn't be buying it outright. I'd be selling puts on this on the next pivot. So you've got a major support level down here, right around $75. So on a pivot, what I'd be doing with this one is you could start the wheel strategy. Again, selling a put obligates you to buy the stock at the lower price. So if I went out there and I say, okay, you know what? If it drops a little bit more and starts a pivot, I'm going to sell the $75 puts for, let's say, $2, okay? Or $1.80, whatever it may be. But if I get $2, they're literally paying you $2 to buy the stock at a lower price at 75. Now, if it goes to 75 or lower, you own the stock, but you got paid $2 to buy it at 75. So your cost basis is 73. Okay. That's if you sell a put. As soon as you get long the stock, what are you going to do? You go right back and start selling the $75 calls, get paid another $2. You see? So you get paid on the way in. If you get the stock put to you, you get paid on the way out. You keep selling calls, sell calls, sell calls, collect the money, just like I'm doing with SLV. Take the money, go buy more shares or buy more options with it. Boom, there you go. End of story. And you're on to a great trading plan. So we're going to wrap that up right at 4:39. Thank you so much for joining us. Thank you, everyone, for all those great comments. We came in number 2 on X, just under redacted right there, number 3, actually. We got Trend Spider in there. So thank you so much for that. Remember, tomorrow afternoon, during the market's open session, I will be putting out the weekly market report. You'll still have the rest of Thursday to trade against that. And all day Friday, if you like, to have that news and position yourself correctly and even protect your positions. And that'll be the big day coming out on SpaceX. So stay tuned. We have a lot more coming at you. Take care. So long.